Welcome to the Cash Flow Academy podcast. I'm your host, Andy Tanner. This is where we do our very best to make investing simple. We're gonna have a great show. This, on a personal level, as you'll find, is very interesting to me, and I know the masses of investors, economists, everyone that cares about investing is gonna. This is gonna be a must-listen show. So I'm excited to hop into that. If you haven't stopped by yourinvestingclass.com yet to get your free goodies from me, stop by there and put that on your list of things to do for sure. And lots of things at yourinvestingclass.com. My guest today is Doug Howarth. He is the author of Hypernomics, Using Hidden Dimensions to Solve Unseen Problems. We'll talk a little bit about his resume. We'll let him introduce himself. We're going to hop right in. Doug, thank you for taking some time to record the podcast today.
Well, Andy, thank you so much for having me. It's a great honor. I really love your show. Thank you for having me on. I appreciate it.
You know, before we went on the air, so to speak, Doug said, Andy, I like your show. I thought, well, at least someone more than my mother is listening then. So we very much appreciate that. And as before we started, I mentioned, I was telling Doug that my oldest son will be a senior in high school, and one of the offers that he's had to play basketball is to an institution that specializes in aerospace and engineering. And he says, well, that'd be nice to get my school paid for playing ball, but I kind of want to go into investing in economics. So, you know, as the universe works here, all of a sudden, we're fortunate to have Doug with us. Tell us a little about your background in aerospace and how that evolved into what you now call hypernomics.
Well, yeah, thanks, Leon. I started out of college. I went into Boeing for about a year and a half. Then I had the good fortune to get into Lockheed Martin Skunk Works, where I stayed for 3 decades. And while I was there, among other things, I was the production manager for the F-117 stealth fighter.
Wow.
Yeah, and then after a while, I graduated to the heading up their parametric analysis group. And I kept wondering why certain products that we would put out wouldn't get purchased by the government, because they seemed pretty cool. And that led me off onto a path to figure out, you know, what we learned in school, if it was true or not. So we'd all learned the law of supply and demand. And something happened in fact, it was after I wrote the book, Andy. I think you might find this interesting. I know I did too. Is that I was out after a run, and I got to the end of this trail, and I went up to the road where I had my car parked, and I was on the asphalt. I'm sitting there catching my breath, and I noticed a little reddish black ant. And I said to myself, well, Dr. Richard Feynman used to study ants. And I said, I'm going to study this guy for just a minute. So I noticed this guy making a counterclockwise turn in little fits and starts. And after about 10 or 20 seconds, he had completed a complete loop, but he was out just a little bit further than he started. And then he went around and he did it again. And again, he's doing little fits and starts. And then I looked closer, and every time he's doing this little stop, he's on the top of a little pebble, you know, a little higher raised than the asphalt. And then it hit me. This little guy was doing recon. So I raced home and I typed in ant reconnaissance into my Google search bar. And sure enough, ants do recon.
Oh, my word.
And they actually do recon in a way in which helps describe what hypernomics is. So what the ants do is they look for new places to live. That's what this guy was doing. He's a recon guy. And what they do is they look for places that are clean, have the right amount of headroom and the right amount of space. So they're looking like this would be the size of your house, how many square feet you have, how tall the ceilings are, how clean it is, your environment, how's the neighborhood, and they want to be away from the neighbors. Well, this exactly describes what people do in markets.
I didn't
So
realize
what happened while I was leaving Lockheed.
I have that much in common with ants. I didn't realize that. That's great.
Well, we all do. That's what's crazy. This ant's been around for 140 million years. And so the way I came about discovering hypernomics is I was watching my wife buy a washing machine, and we needed to get a new machine. And so we pulled into our local big box store, and we pull up to a machine, and she says, you know, I like this machine. It's got more capacity than we have at home. It's got a bigger drum. And I thought capacity versus price. That's what we would call a two-dimensional problem.
Mm-hmm.
Then she said, we only have one delicate cycle at home, and I'd like to have more delicate cycles. And I thought, cycles, capacity, price, she's up to a 3D problem. So we liked this one machine, then we saw the next one up the line, and bigger capacity, more cycles, just better. And I said, what about this one? She says, we can't afford it, it's too expensive, it costs more. And then I realized that we were going to add one unit to the one we were just looking at relative to its quantity sold. So quantity relative to price. So she was looking at capacity, cycles, price, and quantity. She was solving a 4D problem in her head. And I looked around the store and I realized that everybody was doing that all the time in every market they were looking at. So I spent the last 13 years researching that. I quit the
Oh
company,
my.
quit Lockheed, and came up with my book. And I was listening to your podcast you had about the guy talking about Ray Dalio and his principles. And
Yeah.
he's got hundreds of principles effectively. But Hypernomics has only got 4 lines to it. So line 1 reads, product features drive value. Value being the sustainable price. Value, line 2, value determines price. Price limits quantity sold is the 3rd line, and quantity sold is a feature. So those 4 lines, that people say, Doug, it's circular. I go, well, it's always been circular. Yes, thank you. But that creates this little 4-dimensional system that's been around since at least when the ants were around.
Yeah. Yeah.
Yeah.
So recon is done by humans all the time, as you put it in that,
Right.
that's a great metaphor, really, because we're searching, there's the survival instinct, and then there's the
Right.
abundance instinct, that hierarchy. So we're always looking to upgrade. We're always looking around
Sure.
to see how things can get better. Interesting stuff.
Yeah. Yeah, and it turns out the more you know about what you're looking for, so you have these, what we call in doing analytics, you have this error term around what you're trying to predict. And if you maybe only look at one feature, say like the capacity of that washing machine, you might have a pretty wide error term. But if you start to add in cycles, you get a different error term. And if you might add in warranty, the error term starts to neck down. And so the way we go about doing this is we try to figure out all the features that people are using to determine the value. And so what we do is we remove our opinion out of it, and we want to see what the group opinion is.
Yeah.
It turns out that the group, especially when it comes to ants, the group opinion is how they form decisions collectively. And that's how humans do the same thing. That's how they form their decisions, is in the collective there.
For sure. This is an interesting thing because when we talk about economics, we have microeconomics, where we're out
Yes.
looking for a washing machine. We have
Right.
macroeconomics, which human beings tend to try to manipulate and tweak, and central banks. How does
Right.
hypernomics work on the macro level and on the micro level? Could you comment on both of those
Oh,
different
sure.
economic levels?
Sure. It turns out, well, one of the important features we've discovered in all markets, Andy, is what we call demand frontiers. And so if you plot the amount of currency relative to its price in US dollars, what you'll discover is that if you look at the dinar and the British pound and the euro and the dollar, they form what's known as this upper frontier for currency all the time. And then when you get to the US dollar, you start to go down to the Chinese yuan and the Indonesian currency, and there's another outer frontier. It turns out that outer frontier has got the same slope several orders of magnitude away from where the current cryptocurrencies are. They have the same exact response services, which is to say, as you keep issuing more currency, the value falls.
Sure.
So it actually predicts what would have happened if you were to say increase the money supply by 400% like we did in the first 2 quarters of 2020. It says that when you do that, the price is going to follow the currency.
This is, well, go ahead,
Yeah.
finish your thought.
So anyway, the idea is that these frontiers are real, and you have to measure them to figure out what the impact is going to be before you institute a policy.
So what is fascinating to me in terms of quantitative analysis is putting quantities to these things. Like
Right.
we've talked about these four dimensions conceptually. I love
Hmm.
the washing machine metaphor. What is a cycle? How is that quantified, right? How do you get data and metrics on that? And when you say, well, okay, if we're going to increase the money supply by, 400, is there a predictable metric, as you say, the even the crypto is falling in line, perhaps with the behavior of other currencies. How is it that a guy like Jerome Powell and his little group, his band,
Right.
to me, it seems very obvious and even intuitive that if you increase the supply of anything and it becomes less
Right.
scarce, that the
Right.
value of whatever that is, if it's desirable at a baseline, would the value would fall. And he says, no, 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 no. It's transitory. He says this inflammation is transitory. I says, there's just no way you could say this just happens to be supply. And then
I've
when
lost your audio for a second there. I'm sorry. Go again,
Sorry.
please.
Well, that if how does Jerome Powell say, well, this is transitory inflation? I say, no, it's not. Now it's sticky inflation.
Right.
Can about how you quantify these different dimensions, because I think that's a real mystery to a lot of people. When we use the word or the term quantitative analysis, we have four dimensions. How does the data collection, the metrics, and the measurement go with things like that? How does a mathematician, aerospace engineer go about that?
Well, when I was talking about this upper supply, this upper demand frontier, it's got a slope to it. And so it turns out that the best product in any market is usually at the corner where the upper frontier and the outer frontier meet. And so the US dollar formed that corner before. And so what you could have done is you could predict what will happen as you go down this line and you
Yeah,
extrapolate it. You can
yeah.
actually see what that slope says will happen to the value of the currency. And it's got a certain, and now there's an error term that exists past that because you're doing an extrapolation. But we already know how the market's going to behave based on how all the other markets, all the other currencies have behaved. It's going to fall in a predictable fashion. And back to your point, we can have inflation stick around for quarters. In fact, in this case, 4 and 5 years later, because we just pushed too much money out into the world. Now they talk about pulling money supply back, but if they went up 400% and they've only come back down about, maybe a quarter off of that. So there's a long way to go to get the money supply stable from where we
Th- This
were.
is this is absolutely a fascinating discussion, because I love to geek out on this type of stuff, and I'm grateful for guys like you, because it was funny. I just finished a second edition of my book. I was talking to my publisher yesterday, and she was like, "Oh, we're at the finish line," and I thought, man, if my English teachers knew that I'd written even one book, they never would have believed. And my math teachers, I was one of those guys that had to take calculus more than once to earn my A. So it was pretty rough for me. I'm not the brightest bulb. What I think is fascinating about what you've said is you look at, if you took this hypereconomic view
Yeah,
and you went into the Fed meeting and you sat in with those guys, right now they have a dimension that is interesting. They have a dimension of labor,
right,
because that's one of their so-called mandates. And they
right,
have this idea of wanting price stability. We've had a little bit of disinflation, but certainly prices haven't come down. Just the delta, or excuse me, the rate of change has slowed, right? The
right,
acceleration has slowed. It's still, the vector is still upwards.
right,
But if you hold those two dimensions in your hand, and then you have another dimension where we're going to have tools like quantitative easing, interest rates, it's got to be very difficult for them, because I feel like the labor market is going to start to feel this heat. I really do. I think it's inevitable. We already have seen the sectors of consumer discretionary start to fall behind. The
mm-hmm,
market is a little deceptive right now, in my opinion, because you have, Nvidia and just the big players, the Amazon,
sure,
kind of like the new FANG trade is,
right.
I think the end might be Nvidia instead of Netflix now, but the new FANG trade's doing really well, but there's a lot of them that are not. And is that consumer discretionary? That's kind of a canary in the coal mine for me, because, well, that's extra money that people don't spend. And
Right.
so if that begins to shrink and labor starts to suffer, I don't know how the Fed deals with that as you said, if you've plotted out money, money supply expansion and a decrease in value, which is an increase in
Right.
price, how does the Fed, if they were to apply hypereconomics, where do you think they'd wind up, and what do you think their choices might be if they were to study and follow, a hypereconomic path?
Well, the one of the things that we did back in 2019 is we plotted all the currencies of the world together to come up with those demand frontiers. And then we have what's also known in opposition to what the demand for the money is, there's the value of the money. And the distinction that the law of value and demand makes is that value happens on one side of the equation, and then it's got an opposing, leveraged, opposing equal force and demand on the other side. So the value of the currency goes up with keeping the supply down, but it also goes up with how much foreign currency you're holding,
Right.
how much hard currency you have of the other thing. And then it also goes up and down with the interest rate. So if you, back in 2019, the United States currency was worth a lot. It only had a 2% inflation rate. But
Yeah.
back then, Brazil had a 63% inflation rate. And so their value was depressed. And so controlling the interest rates, which comes out of having too much inflation, is part of what keeps the money supply stable. That's what they want to be able to do. So these forces, as I said, people say, Doug, you've created a circular problem. I said, no,
Yeah.
I revealed a circular problem. This problem, they kind of feeds on itself. It's in a loop, and you can't get out of the loop easily. If you start to ignite one side of it, then it can, it can do a spiraling thing, or it can spiral up, then it can spiral down. So that's kind of what we've discovered here, is that it works in
See,
opposition. The
it's funny because as an investor, I'm a perma bull because I believe that a person that has equities becomes wealthy. So as an
right.
individual, I'm always wanting to acquire assets.
Mm-hmm.
I can only give so much value as a person, but as an owner of entities, you leverage, you get a share in Apple's value they give to the world. So I really believe
Sure.
strongly as an
Yes.
individual. But on the macro front with the Fed, I feel like their spiral is a downward one. I don't know what the hypereconomics would say, but I think, they I don't think that they can go to quantitative easing. I don't think they can drop interest rates significantly without resuming inflation, which will cause even more pressure on markets because when prices are too high, you're not solving a problem.
Right.
People,
Right.
if even if you inject income in, it is that circular idea. Okay, I'm going to inject money into the system. I'm going to make money easy to borrow. I'm going to let people,
Right.
get more money. Well, that's great. But if prices go higher, I'm struggling at the grocery store.
Sure.
I still, people are still going to spend less because it's worth less. Is that, is
Yes.
that,
Well,
is
that's
that
exactly right.
close?
Yeah, you've got the whole problem really nailed on the head here. But what hypernomics does is it lets you gather all these forces and basically place a model in front of you that you can see, that you can work with. In fact, that's how we create we've got our own fund. It's based on that idea. So when I talk about the law of value and demand, which is what I gave you before, the first thing it's doing here is that this red side here, this red plane, this is the Dow Jones Industrial Average. This is the Dow 30 in 2019. And so this really high point here, that was Boeing back then. This is Boeing before they had all their problems. And then this is Microsoft, and this is Apple. And so this is what's
Okay.
known as this demand frontier right here. So every other
Yeah.
point, every one of these points is a stock in the stock market. And so there's the same, you can imagine the same things happening for currencies. So you could have the NAR back here, the British pound here, and the US dollar here. And then you've got all the cheaper currencies over here. So what's holding that up? Well, what's holding it up is the value of the stocks. And the value in this case is determined by the earnings per share. So the earnings per share are here against the back wall. And
Yeah.
over on this side, we've got the return on assets. And you see, as you get higher earnings per share and you get higher assets, this plane describes the net effect of both of those things. So points above this may be overpriced, or there may be other forces
Yeah.
at play. again, these points are stocks, and points below this may be stocks that are underpriced or the other forces are at work. So we use this exact tool to make our stock picks. And so, for example, this point here, again, this point is this point. This is Boeing
Yep.
relative to its value. And you see it was high above this plane. Well, why was it high above the plane? Well, back then, again, this is 2019, Boeing had 5 to 10 years of backlog.
Yeah.
They had 5 or 10 years. They could just work without selling a single plane for 5 or 10 years, and they could work this backlog off. And so the
Yeah.
market properly was rewarding that. And so what we're getting at here is that earnings per share and return on assets are important, but other features are important too. And so that's helping work how the market sees every one of the stocks that it could buy out there. And so this same kind of technique needs to be applied, I would argue, to the Fed. They need to be able to deploy and modulate and monitor these models for all the currencies in the world, most importantly for the United States, because these forces are real. They're at work every second of every
Yeah.
day. And if you don't understand that, and to your point, the Fed doesn't, what you could get is you could get the Fed doing things that are counterproductive to the US economy.
I
So,
absolutely I love visuals because it gives ideas mass so I can
yeah.
see them. And that model, I don't know how you built that, but it's pretty darn good. I
It's
like
a
to say
40
this.
mile built on a 3D printer. So,
Is it really?
yeah,
That is, I should hang out with aerospace guys more often, man.
yeah,
What I saw there, and tell me if at the risk of oversimplification, what I saw there is actually a sort of a model that helps me detect or observe detachment between fundamental and technical data. In
you are
other
spot
words,
on, Andy. Yeah,
that's what I saw at
yes.
my low brain prey grade, because really, when I teach people investing, I say, look, you really want to learn. Everything falls really under four basic domains. The first is the underlying business does matter.
Right.
Earning, return on equity, earnings per share, all those fundamental ratios
Hmm.
that we kind of compare them apples to apples, really. We say,
Sure.
if you want to know what a good PE is, we'll look at everybody else's PE and see which apple
Right.
looks the best. Well, if you want to look, so we have this apples to apples. But the moment, Buffett doesn't have this problem because, Dairy Queen's not for sale. Fruit of the Loom's not for sale. Duracell and Geico are not for sale. But the moment you make the shares itself a commodity, and
Right.
you say, now we're going to introduce supply and demand for this engine that makes money, there
Right.
can be an incredible detachment from the fundamentals. And now you're looking at things that are overbought or overpriced, or you
Right.
say, man, these things are underpriced. And what I saw in that model that you held in your hand was a sort of mechanism to kind of better understand the degree of that detachment from fundamentals one way or the other. And I suppose the idea is there is a gravity to fundamentals that the price will come back in line eventually with where the value proposition is, whether it be you're getting it low and the value goes up, or you're paying too much and it goes down. Am I even in the ballpark?
Oh, that's exactly what the ballpark is, Andy. You're a very quick read. The point is that you could price, as a producer, you could price something too low and the price will rise. You could price something too high and the price will fall. Getting back to aerospace in the early 2000s, the seventh employee from Microsoft, Vern Rayburn, went out and built a business jet in Albuquerque, New Mexico. It carried 5 people, went 410 miles an hour, and had a range of 1,400 miles. And by our metrics, it was worth a little bit over $2 million. We initially sold it for about $750,000.
Wow.
So what would happen if you sold your house for half price? Well, you'd
Yeah.
have all these offers on it. Or if you're
Yep.
going to sell cars, so you started making cars and you sold them for half price, well, you'd have tons of orders, and that's what happened. He had tons of orders. He has a cost to build them. His cost was higher than his price. He went bankrupt on that. Or you can
Oh,
do the other thing. You can price it too high, or suppose the demand is too great. So out in Nevada, somebody priced had a business jet they're building. It was going to be supersonic business jet. Cool. So the price was right, and we looked at their cost. Their cost seemed to be right. But then they said they were going to sell 300 of those in a decade. Well, they were that demand frontier that I showed you.
Yeah.
They were way past the demand frontier. In fact, I worked it out that they had one chance in 40 of making it, and I called them out on it, and they wrote me a nasty note back on LinkedIn. And then 6 months later, they went bankrupt, and they stopped writing.
This is fascinating because if you look at a guy like Elon Musk, you have to the new term that I've taken from this as a student is the word demand frontier.
Yeah.
Because if you can see that and extrapolate that, then you know whether you have a chance to build that electric car or the Cybertruck.
Right.
If you can project a demand frontier, that's a really big piece of this. We've been rolling so far so fast, I forgot to take my commercial break. I'm going to take a quick commercial break, and I hope you're okay on time because when
I'm
we
fine.
come
I can stay
back,
as long as you need. Yeah.
then when I come back from break, we're gonna delve into and apply hypereconomic theory to some other things that are more on the boots on the ground for the listener and what they might be able to do decision wise. So we'll come back. We'll be right back after a quick break.
So far, it's been great. I needed a source where I could really enrich my education through stocks. I didn't really have an avenue for it, and it's helped me a lot. The simplicity has really gotten me on the track to where I enjoy the learning as well as it's really solidifying in my mind. And like, they're not just trying to sell you something, they really care about the people that are in the course, and they really do care about you and your personal goals, and what you want to do is to help you and your family and whatever your goals are in life through that. So it's really been great.
All right, welcome back to the Cash Flow Academy podcast. What an incredible experience and learning experience for me. We're here with Doug Howarth, and he is the author of Hypereconomics Using Hidden Dimensions to Solve Unseen Problems. And I want to talk about the unseen problem part just for a bit.
Sure.
So it's so funny. So not too many days ago, we have an assassination attempt on the former president, and now everybody is looking at the Secret Service like, well, this should have been obvious. You know, here's this building, and it's a 130-yard shot, and 9/11 happens, and everyone acts as if we should have seen that coming. And when I look at, we talked about fundamental analysis as one domain of data. We talked about technicals as another, the price action, the interplay and detachment between those two, and the behaviors of them. Technical analysts are always looking at every type of pattern and chart and oscillator. And I mean, there's a huge push for high frequency analysis on that stuff. But then that's just data gathering. That's just data collection. I don't really get to control what Apple's chart says or what their earnings are. What I do gain control in is the next two domains, which is my positioning for cash flow. After I look at this data, how do I position myself in the market? What decisions do I make? And then the other one I have an impact on is what are my risk management? What are my countermeasures? What are my plan Bs? What are my edges? What are my insurance policies? So when we look at that fourth domain of risk management, which I believe is the most important one for any investor, is to understand. People always say, Andy, what's the scariest thing you see in the market right now? What's the biggest threat? And I go, well, the one that keeps me up at the night is the one that I haven't thought of yet. It's the one I couldn't see coming. It comes in at 90 degrees. I remember I got a great lesson in 90 degrees. A quick story, if we can stomach it. I'm back in college. I'm dating my wife. She's my girlfriend, not my wife yet. I'm playing basketball. And all her roommates leave for Halloween or going out. And I'm on the phone with my dad planning a pheasant hunting trip. And so my future wife is busy bodying around. And that hasn't changed. And all of a sudden, a guy kicks in the door. He broke the door frame as a so-called joke. He has a hockey mask on. He has a chainsaw with no chain on it. And it was one of her roommates' buddies, and so he thought it'd be funny to kick the door in and play Chainsaw Man on Halloween. So nobody's there but my wife, and he chases my wife down the hall. I didn't think it was funny. So I run down the hall, and I'm 6'8". I'm a pretty good sized dude, and this guy was smaller, but he was pretty solid. So I grab him, and I got him in the hallway, and my back is against one end of the hall, and his back is the other. I got him pinned, and I got my fist right about there, and then everything went dark for a minute. What I think he was a fullback on the football team. What I didn't see coming at 90 degrees behind him, what I didn't see coming was his buddy, who I think was probably a defensive lineman. He hit me so hard. I never even saw it coming. I woke up on the ground and I got two guys punching me. So that 90-degree part,
Yeah,
that dimension that you don't see
right,
coming, that
right.
struck me in the subtitle. We have hidden dimensions and we have
Yes.
unseen problems. Now, to me, that's holy grail type stuff. If you can start to find the unseen stuff. So could you expound on that subtitle a little bit? And, quantitative analysis is all about what we can see. How do you get into the stuff you can't? How do you see the unseen? I mean, that's holy grail stuff.
Well, the first thing we have to do all the time, Andy, is you got to go out and start to extract all the data. So, for example, if you were to go pull all the data for business jets, which we did a while ago,
Yeah.
and you find they have a demand frontier, and suppose you're Boeing, and again, this is pre 737 MAX problems, and you're looking at your 787. That's the very large airliner. They turn that into a business jet, and you might notice the 787. If you plotted all this stuff, you find it's against this demand frontier, and you say, well, back to your point about the 90 degrees, how can I get that thing to make more money? Which is to say, how can I move it down the demand frontier? Now, if your cost is quite a bit lower than that, you could drop your price. But part of what your costs include is this thing called the engines. You've got engines there. And then you go and study the engines that go into this, and you'll discover that, as we did, that the engines for this, they're also up against their demand frontier. Now, if their engine cost is lower than that price they can fetch, the engine manufacturer and the aircraft manufacturer could both drop their prices and make more money. Now, how are you going to figure that out until you manage to find these these hidden dimensions? You actually got to plot that. And when we take this one 4D model for the business aircraft and take another 4D model and we put them together, we get a 7D model. So you've got many hidden dimensions. You can't see the problem until you glue it together. And so that's what we did. And in my last, in fact, I won a best paper for this at an international conference in May, where I showed how we do this. We can actually just glue this stuff together and figure out what's happening here. So you have to figure out, you've got to pull all the data in, and then you've got to fairly plot it, which is to say you've got to take your opinion out and figure out what the populace has done. And that's what we're trying to capture, is how people collectively think, just like the ants, back to what the ants did. That one ant going out there running point,
Yep.
he's just relaying back to the group what he sees, and then the group makes the decision about where they're going to go. And they know what they want.
Very logical and absolutely fascinating stuff. In fact, you mentioned that at the very beginning of of our conversation, that you said we want to go out, and we talked a little bit off air about Jim Simons.
Yes.
He was a great quant pioneer, in my opinion, and part of his quest was to remove emotion. We have a saying that when emotion goes up, intelligence goes down, whether it be greed, fear, whatever irrational exuberance. And that really is an interesting time. And when Jim first started, the data, you had a 300 megabyte system, and it was the size of a refrigerator, and you had to get piano movers, you had to get the piano movers to bring it in, and now it's on your phone. How does technology impact what you do, and the ability to find all of these parameters? Sounds, you're the ant, you're looking at all of these parameters, and you have to say, okay, we have the plane, but then we have the engine, and inside the engine we have this, and we have derivative after derivative after derivative to go look at. How's technology helped? Where do you see that going in the future?
Well, one of the things we've done for ourselves is we wanted to be able to plot in 4D. So when I first came up with this thought there wasn't a 4D system out there. So I raced off and got myself a computational fluid dynamics program. I don't know anything about computational fluid dynamics, but I taught myself how to plot in 4 dimensions. And I said, you know, it'd be pretty handy if we had a tool that did that by itself. And so we created that tool. That's this patent that's over my shoulder. So we've created the world's first 4D software. And so what we do, the tech we've applied is we take this tool and we import stock data in it, and then we actually sort and see how the market's ranking out the features that are given to it. Now, back to your point about Jim Simons, when Dr. Simons was looking at all manner of technical data, he was also looking at cycles and things like that. So, for example, one thing we haven't included in our software yet that we need to is cycle time. So, I heard you talk about Warren Buffett. I know he liked Coca-Cola. He always says he buys and buys and he holds and holds. And I thought, is it a good idea to, what would Jim Simons say about, have said about Coca-Cola? Well, interestingly, I noticed a little trend that happened in the early 2020s was that Coke would in sometime in late February, early March, would hit a low for the year. And then it would gradually climb, little fits and starts up and down. It would go up in the summer, fall down a little bit in the fall, and then climb and climb and climb and climb. And then do really well at Christmas and do really well into February and then plummet. And then I go, what's happening at the end of February? Well, in the United States, we have this little thing called the Super Bowl, right? You know, and around Christmas time, we have the Christmas holiday, and people are buying Coca-Cola. As Buffett will point out, 1 in every 8 ounces of fluid that's being consumed in the United States is a Coke product, including water. Yeah. So it turns out that this thing had a frequency to it. And this is what Jim Simons discovered in the commodity market. There was a certain frequency that somebody would be high on a Tuesday, drop low on a Wednesday, and come back on a Thursday. And so he kept repeating this pattern until the pattern exhausted. So one year, what we discovered is, hey, look, we'll buy it on the trough in early March, and then when it hits, you know, middle of January, before it hits the absolute peak, because we can't be guaranteed there's where the peak's going to be, we'll cash out. And so that worked too. So there's a lot of tech that we can apply to this. We've applied our 4D model, but we need to have massively more tech. We need to get a little bit more AI into this and figure out how we're going to go forward. So that's one of our goals going forward, is to apply AI on top of the 4D analytics and see where we can go.
Boy, it's a brave new world, and it's an exciting world. You know, there's a lot of folks, I think, that wish the progress was stopped because they have fatigue in trying to keep up. To me, it's exactly the opposite. The illumination, the discovery. I just can't imagine someone wouldn't want to be a lifetime student of whatever they're interested in. As it changes, to me, it becomes ultra fascinating. And to have a chance to speak with guys like you on the forefront of this, I love it. USC wouldn't let me near their campus for fear of everyone else just getting dumber by osmosis. It's like, don't let Tanner around here. We'll lose IQ points if we let this dumb former jock around here. But I'm so grateful for our conversation. The book, go out and buy this. If you haven't, I don't think I need to sell this very hard. If you haven't, if you don't have a desire to go to Amazon right now and get Hypernomics, using hidden dimensions to solve unseen problems, my word, I don't know what sales pitch I could give you. It is so interesting to be able to do this. You've got a number of you award a U.S. patent. You've got 4D structure. There's a lot of pioneering going on. If a person could take you to dinner, certainly they'd pick up the tab. For less than that, they can get Hypereconomics and learn about it. So anything you would say to the person who says, well, I'm working a 9 to 5. I don't know that I can, leave, go to USC and get an engineering degree or an aerospace degree to learn all this stuff. What advice would you give the person? Is there a use for this type of knowledge for the layman, or do I really have to be as smart as Doug Howarth here?
Well, I would argue that just like the ants were doing this multiple dimensions things, that everybody's doing this already. We're not asking you to do anything that you don't already do. When you look at the book, which I'm happy to say hit #1 in macroeconomics on Amazon last week. When you look at the book starts out with Hansel and Gretel. You know, and why does it start out with Hansel and Gretel? Well, Hansel and Gretel are laying down rocks, and those rocks represent a position that's saying that I was here. And they're using those rocks to find the way back home. Well, in the case of a market, every time you make a purchase, you're saying Andy was here. Andy was here, he was there, and he was there, he was there. And when Andy's purchases start to add up along with everybody else's purchases, you get a certain quantity. There's a certain price you've supported for this product based on its features. And you, Andy, and me, along with everybody else, is actually adding to this at all times. And so those physical models are actually representations of what we're doing collectively so that you can actually model that. So I would argue for everybody that, I mean, the book's written to a high school level. I've checked it out. It's basically reflecting what it is that you already know. It's just reassembling it into a new views that you could actually use for yourself. So, you know, it obviously pumps ourselves up, but, you know, using the book would actually reveal a whole bunch of stuff that you're not going to see in college yet. We're being marketed to colleges, but this isn't in the curriculum yet, and it will be soon. So
Yeah, college is tough. You know, I told my son, you ought to go because that's where you're going to meet girls. And there's a lot of fun to be had in college on the social front. But those guys usually, with the exception of few institutions, if you look at guys, you know, the irony of Steve Jobs giving the commencement speech at Stanford just blows my mind. I mean, the irony of the guy that left is
right,
you know, because he just didn't have time. Gates leaves. There's
right,
just not time to be there because they're so slow. And so many guys just say, you know what, I don't have time. We've got to solve problems and get things done.
right, right,
And
right,
I can learn faster by, you know, on my own. And I really believe that. I think a person, if they make an education hierarchy that is personal to them, you know, for example, I think it's nice to be well-rounded. That happened to me automatically with my diet, but I was asked to dissect a frog. I thought, well, if I want to be a biologist or you know, a herpetologist or whatever those frogology is, great. But for me, it's not in my values in the eye of the beholder. It's not in my education hierarchy. It's very, very low. And I
sure,
think a person, you know, when they take a book like Hypernomics, they're just saying to themselves, look, I'm taking control of my own educational path. School is kind of antiquated. In the information age, I get to pick and I get to study hard on whatever I want to. And guys like you that are willing to teach, you know, I don't need to spend a lot of tuition here. I don't need to get a student loan here, which is the worst loan ever because there's
right.
no collateral and no employment when you get it. Um, there you go. So great stuff. The website is doughowarth.com. The book is Hypernomics, Using Hidden Dimensions to Solve Unseen Problems. Any thoughts for these people that I just spoke about, parting words on
Yeah, if you went out to our website, hypernomics.com, hypernomics.com, and you might think that this is beyond you, but if you start to look at the little vignettes that we have in the blog, which came out of my LinkedIn post, you'll discover there's a whole bunch of ways that you can apply this. We've applied this to everything from the economy with the currencies. We've applied it to COVID. COVID actually uses hypernomics. It also works out for the NFL wide receivers. And it turns out that if you're a wide receiver, you can take your 40-yard dash time after you've been in the league for a few years, just down by a 20th of a second. It's worth $600,000 to you. So this has got applications in places that nobody thought of until you actually go out and do the analytics. And the users, which would be the readers, they're going to figure out their own places. And maybe when you do that, you get as excited as I did when I saw that little ant from a few months ago and realize you have that light bulb moment to think, that guy's doing what I'm doing.
yeah. Yeah.
And so that's what you want to do is you get your own light bulb moment for yourself here. That's what I hope the book does for people.
Doug, thanks for taking the time. I hope we could have you back sometime and
Well, I'd love to be
talk
back. I'd
more.
appreciate it.
We could
Yeah, it'd
talk
be
all
fabulous.
day, and we'll see also how these models, you have a private fund that's not open. You're not taking money, but it's been
No.
outperformed Berkshire Hathaway since its inception. And
Yeah.
it's interesting. There was someone who once said, the age in which we live, we should be the most informed generation of investors ever.
Sure.
The technology, the ability to make decisions that are data driven rather than emotionally driven and on gut feelings, it's tremendous. And Hypernomics is certainly part of that frontier. And it's going to be a lot of fun to hear people's feedback. You've been listening to the Cash Flow Academy podcast. This is where we do our very best to make things simple, and looks like Hypernomics is going to do a great job of that for us. If you haven't done so, drop by yourinvestingclass.com for educational goodies. And again, hope you enjoyed our conversation. We'll see you next time.